Another day, another tax hike proposal from Bernie Sanders. We've been seeing a lot of tax hike proposals from all over the Western world recently, with COVID, of course, being the excuse. Wealth taxes have been talked about more than almost any tax I have ever seen. You're seeing talk of rising income taxes. You're seeing talk of new taxes, even retroactive taxes. But now Bernie has a new proposal, of course, on the millionaires and billionaires that we're going to break down. Because it not only affects those of you who want to stay in the United States or keep your U.S. citizenship, but it affects the evil traitors who might want to expatriate for good. Hi, I'm Andrew Henderson. I'm the author of this book, and here at Nomad Capitalist, we have over 45 team members, a network of global experts I built in over a decade all around the world, and yours truly, all helping 7- and 8-figure entrepreneurs and investors legally go where you're treated best. You can learn more at nomadcapitalist.com. Bernie Sanders is always good for a great discussion when it comes to the never-ending trail of tax hikes that he is proposing on Americans. In this video, I'm going to talk about not only why this could affect you if you're living in the U.S., but if you're planning on leaving the U.S., even expatriating, handing in your passport, this could impact you. So he's got a new bill out called the 99.5% Act. That's his entire thing, is you're either one of the nasty people who worked hard, 9 out of 10 North Americans earned their millions, but you're one of those nasty people, or you're one of us. You go to Bernie Sanders' Twitter page. The struggle continues, it says. Bernie, you won. Your people have won. You control all the branches of government practically, and yet, that's his identity. It's to struggle, to be miserable, to be a victim, to be helpless. That's not what we talk about at Nomad Capitalist. But if you stick around in the U.S., you might end up being the victim. So at least it's worth having a plan B. Let me go over from one of our boring tax journals that we read here at Nomad Capitalist, details of the proposed 99.5% Act. It could impact a lot of people, even if you're leaving. Number one, the estate tax exemption will be reduced to $3.5 million per individual. That's $7 million per couple. So from the current numbers, that's about a 2/3 decrease from the current 23.4 million limits. Now, obviously, those current estate tax limits are sunsetting in 2025 if they're not extended, so it's going to go back down anyway. But he's going to greatly reduce your estate tax exemption. On top of that, he's going to reduce the amount of lifetime gift tax transfers down to $1 million. So right now, you can use the unified estate tax credit to make gifts. Let's say you are going to renounce U.S. citizenship and you want to do some tax planning to either avoid covered expatriate status legally or reduce your tax exposure to the exit tax. You can make gifts to a spouse, for example, or to other people. Now, we're not going to recommend that you do that through some flim-flammery. We are the goody two-shoes of the offshore business here, after all. But there are legal ways to make gifts. Now he's going to whack that down to $1 million, $2 million for married couples in a lifetime. By the way, that's then going to come out of your greatly reduced $3.5 million. So basically what he's saying is, you get one dramatically lower limit, you get a second limit that's basically reduced by over 90%, and now we're combining them and you can only use them, you can't stack one on top of the other. He's also going to increase the estate tax rates. No tax on the first $3.5 million, 45% on that, 50% if you're from 10 to 50 million, 55% above 50 million, and 65%, 2/3 of every dollar you've earned that you've already paid half your money in tax on will be taken if you have an excess of $1 billion. Now, even if you're not an American, by the way, even if you're not a U.S. citizen, the estate tax can apply to non-U.S. persons, to non-citizens, non-green card holders, people who have no other connection to the U.S., but they have what's called U.S. situs assets. Many people don't know this. I have been helping many people. Many people didn't know. If you're a non-U.S. person, you own certain real estate, you have brokerage, you have even cash in some cases. I have helped a number of people discover this, where if they would have passed away, the U.S. government would have come in and taken 45%, now apparently up to 65% of their money for merely committing the sin of investing in the United States. So when you hear me, a traitor to the United States, someone who parted ways for good, people say, well, why wouldn't you invest in the U.S.? What are you so uptight about? I don't want to die, and I don't want to invest in a country where if I die, I have to give half my money. Now, there's ways you can avoid it. There's ways you can plan around it. But just, if you can invest somewhere else, it's often better to do that. Now, The 99.5% Act, in addition to dramatically reducing your estate tax, dramatically increasing the rates depending on who you are, and changing how you gift assets, including if you're doing so before you're leaving the country, it will also have provisions that would significantly curtail the use of current planning techniques such as the application of valuation discounts to certain interests, the use of grantor retained annuity trusts, a grantor trust, and other annual exclusions on gifting things to trusts. And so these things could take effect. Now, these are not all things that we would work with when someone who goes offshore, but let's say you're planning on divorcing the U.S. for good. You have certain assets. There may be legal strategies to say, what's the value of this? He's going to dramatically make it so there's a lot more limitations on how you can value certain assets legally. Now, there have been stories. There's a story of one particular guy in Russia. He renounced his U.S. citizenship. And they say allegedly when he did it, he was worth billions of dollars and he wrote down a very small number. We're not talking about that. We're talking about saying, here's an asset, we can disagree over what it's worth. He's going to slash your ability to do that down to practically nothing. Basically, Bernie Sanders gets to decide what your business is worth, what your artwork is worth, what your jewelry is worth. Bernie Sanders is appointing him appraiser-in-chief. That's his new job. If there's other issues, multi-generational dynasty or legacy trusts are going to have a cap. His thing is that no one should be able to have wealth for a long term. If you were in wealth, what for me is interesting as I get older is the idea that, people say, you have to enjoy your wealth, and I agree with that. But the idea that you work hard your entire life, and perhaps that could benefit charities, that could benefit future family members, that could, create some kind of dynasty, as it says, and you could continue to have an impact even after you're gone. He hates that. And they also hate charities, these Democrats and the people on the left. They don't like charities because they want to be the charity. They don't like the competition that, at least the charities that I give to, are far more efficient than anything Bernie Sanders has ever done because they have to actually, again, the charities that I deal with, they're basically small businesses. They've got to stick to a budget. They've got to raise money. They've got to control costs. Bernie Sanders can't do that. They've got almost a $30 trillion government debt. Bernie Sanders has been in power for how long? He's done nothing, but he's going to tell you can't pass your money on through dynasty or legacy trusts. So those are some of the things that are in this 99.5% Act. It used to be you're in the evil 1%. Now you're the evil 0.5% Act. Of course, it's all political posturing. And of course, as more successful people like Nomad Capitalists leave, you're going to have to go down and make it the 99%, the 98%, the 95%. And the numbers always come down, right? I mean, look at the alternative minimum tax in the U.S., for example. Look at where that started out. By the way, you know what the other thing Bernie doesn't do? He doesn't allow these things to be increased for inflation. So Bernie's out there overseeing the massive printing of U.S. dollars like you've never seen before that's going to cause, who knows what's going to happen, but not some good things. And, and yet you can't adjust for inflation. So Bernie oversees everything they're doing with the money supply and just, let's send everybody a check. It'll cost $4 trillion. Who cares? Let's have an infrastructure package. Who cares? Just print more money. Oh, but when the money is worth half as much, you still have to pay tax on the initial amount. So this is what's going to happen. It's what always happens. They set things like an alternative minimum tax, and for how many years did they not adjust that number? Or, look at the numbers for renouncing citizenship. Being a covered expatriate still entails a net worth of $2 million. It has been quite a number of years that it has been at that number. It's been over a dozen years. They don't raise it. It's not adjusted. Other numbers for the offshore world, like the foreign earned income exclusion and some of the exit tax credits, those are exempt, or those are indexed to inflation. But this is the latest. And what I said when I left the U.S. for good, I told you last year, I said the greatest thing that I got was peace of mind that I don't have to worry about whatever nonsense they dream up now. But if you are in the U.S., if you have wealth, if you want to pass it on, if you want to do succession planning, if you want to do gift tax planning, if you plan on expatriating or potentially expatriating as things get worse and worse. I have more people than ever calling and saying, I want a plan B. And we're discussing, what would it take for you to have to leave your country for good, whether it's the U.S. or somewhere else. This is the kind of stuff they're talking about. And I think that for when these laws come into reality, you may not have that much time to react. It's always worth having your second passport in advance. It's always worth having your exit plan in advance, that you're not scrambling around when this comes into place. This is in addition to all the other crazy taxes they're putting out there. They just can't help themselves. How can Nomad Capitalist help you? 4 ways. Number one, subscribe to our channel and click the notification bell to make sure you get our new video every day. Number two, get a copy of Nomad Capitalist, the book. You'll learn a lot of my personal experiences over a dozen years of studying this stuff, as well as exactly some of the strategies that you can use to build your Nomad Capitalist plan. Number three, if you're not sure where to start, but you want to come and learn from my team and I, you want to come and mingle with like-minded people, learn more about our live conference, Nomad Capitalist Live. It's coming up soon. And number four, if you want some help right now because you've got a burning issue, you need something solved, you want to lower your taxes, get a second passport, or build the Nomad Capitalist lifestyle of your dreams, go to nomadcapitalist.com and click on Become a Client.